there's been a lot going on in markets over the past 24 hours. Unfortunately, there's not a lot of rhyme or reason. Of course, we saw this time yesterday, we got that announcement coming through about the apparent deal that had been struck between the United States and Iran, and lots of conflicting statements about what exactly the deal entails, how many points there are, what exactly is contained. And nothing seems to have been resolved on that front overnight. All we know is that at this stage, we're still seeing these the two sides expected to go and meet in Islamabad starting on Saturday morning our time. But when it comes to the detail, it seems poles apart. Again, Iran still thinks it's about charging tolls for the Strait of Hormuz to safe passage. We still have lots of concern there about enrichment of uranium. We also have concern about what it means for US troops based in the Middle East region. So none of that stuff has been resolved at this point in time. And then just a layer on top, as I mentioned yesterday, we've seen reports of continued fighting. And of course, anyone who's been looking would know that there's been a heavy bombardment of Lebanon, particularly Beirut, from the Israelis. There's been counterattacks as well that have come through in the past few hours or so. Reports of energy infrastructure being damaged as well in the Middle East, that coming from the UAE, launching some attacks there on Iranian assets. So when you look at it, this ceasefire looks not just fragile, but incredibly fragile. But don't tell equity markets that, because they were off to the races overnight. And again, we're seeing a little bit of a bid coming through in certain markets today in Asia. But I wonder just how long that's going to go and stick around for, because when you just look at the detail, you look at what's happening, you look at the flow of headlines that are coming through, nothing, and I repeat, nothing is really positive and giving me any sense of confidence that this ceasefire is going to stick. Now, the move that we've seen, particularly this time yesterday, was a massive recalibration of pricing, risks that were out there. And it was driven primarily, by my view, by what was going on with positioning. There was a lot of very weak hands there, a lot of bearish positioning that was already out there. And we saw that unwound very quickly. And some huge gains in Asia, Europe, 5% plus gains. When you look at where these equity markets are sitting right now, they're almost near record highs. Like there hasn't even been any change in the fundamental backdrop. But we have sharply higher risk-free rates, bond yields around the world, government bond yields. We also have a much stronger US dollar, and we have higher energy prices. And when you look at things like the curve for Brent, when you look at the curve for natural gas futures, yes, we've seen front month contracts come off the highs quite dramatically. But when you look out in months, they really remain quite elevated relative to where they were before the war. So higher energy prices, the risk premium that's embedded is still in place. I'm just going to go and bring up a couple of charts as well, just to go and emphasize that the move that we've seen in equities gets a lot of market attention, a lot of attention in the financial media, but the other markets are not giving me anywhere near as much confidence. What you can see here is US dollar index. Daily chart, clean break of the uptrend, and you can see here gaps lower on the open yesterday, but then look, this cluster of the 100, 50, 200-day moving averages, and you can see 98.50 is a support and resistance level as well that's been upwarding in the past. So we've had a big bounce off this and a dragonfly doji. Now, in and itself, that doesn't give me a reversal signal, but it does tell me that there's already a lot of indecision in the market. The price action in the dollar is not saying, hey, this thing has got a lot of legs. Then we look at Brent. So what we've got here on the left-hand side is the daily chart. Yes, the price has come off the highs. You can see 119.50 is where it got to, and that was in the early stages of the war. Yesterday, bottomed out at 90.41. But then you can see here, the price has gone and reversed higher. Again, another doji on the daily. And then today in Asia, we've reopened and it's higher. And you look at the price action here and remembering that so many of these market moves and sentiment has been driven by what's going on in energy markets right now. You can see that we've had this huge reversal off the lows. So we're now looking at a reversal of more than $7. So we've essentially gone and eradicated 50% of the decline that came through on Wednesday. So Brent's giving us a warning signal, the dollar's giving us a warning signal, and then you look at things like what's going on with risk-free rates. So this is benchmark 10-year yields across the G7 nations. And you can see here, yes, we've had a really pronounced decline that's come through in a lot of these markets, but have a look at the price action that we've seen over the course of the session. US Treasury yields grinding higher, off the lows in the UK, off the lows in France, off the lows in Canada, same in Germany, same again in Japan. So when you put that into the mix, what it's telling me is that it's not all hunky-dory out there right now. There is a lot of concern out there that this is not going to go and lead to a positive outcome, that markets are very quick to price in yesterday. And so that makes me really nervous about some of the moves we've seen in equity markets. So really, when you think about it, global equities right now are 3% off record highs with vastly higher risk-free rates, vastly higher energy prices. So when I put that into the mix, I follow the price action very closely. I pay attention to the signals, but from a fundamental perspective, it simply doesn't stack up.